Jeff, welcome. And we're actually going to start with a stock not on that list, but with high short interest, and one that was popping certainly earlier today, and that is AMC. What do you make of it?
Yeah, look, AMC, I mean, these stocks are trading down 10% one day, up 10% the next day. So not necessarily indicative of companies that are trading on any sort of fundamentals. So it's very hard to be long. It's also very hard to be short. They're dangerous, quite frankly. But I would not touch a name like that with a 10-foot pole, quite honestly, especially from a fundamental perspective. It's still trading at 10 times its pre-COVID price-to-sales ratio. What has changed? The answer is nothing. It's still unprofitable, not for this market.
All right, let's go to the gap. It is nearly 70% off its highs, 15% short interest. This has been sort of a crippled stock for quite a long time.
Yeah, sort of your more traditional name there, and certainly cheap. So if you have a very long time horizon, maybe this is the time. I just think that, for the next, say, 12 months, this is not a particularly good stock. It's a company that tends to rely on promotions. It didn't during COVID. It's starting to do that again. And now it's dealing with higher costs. So margins are getting squeezed just at a time when real incomes are also getting squeezed. So demand is tightening up a little bit. In this kind of market, I would rather a Lulu, which has a little bit of pricing power, and the stock is re-rated quite a bit. Maybe even more interesting would be a Dollar General or a Walmart. I don't know if we have the chart, but I did send in a chart with Walmart charted up against the ISM manufacturing PMI. And you can see as economic growth starts to slow, Walmart usually outperforms. I think that's a good place to be over the next, say, 6 to 12 months.
Walmart against the PMI. I love that. All right, so let's switch gears and talk about Sunrun then. Solar panel maker, more than 70% off the highs, 14% short interest. What do you think?
Yeah, I guess this is three strikes, you're out for me. It's sort of a similar stock, right, that's not for this market. It's negative EPS, even in the out years. This is not a market for story stocks, and there's still a lot of unknowns. 40% of their customers are actually concentrated in California. There's a lot going on right now relative to regulation there that could end up hurting their customers. Maybe you could play for a trade here, sub 20. It looks like there might be some technical support, but I would definitely be selling it into strength.
Selling it into strength. So let's go back to Walmart, which you think is a kind of better for the macro environment that we're in, Jeff. Are there a couple of other names that you would add to that list?
Yeah, Dollar General would be one, too. I've been talking about these names like Walmart, Dollar General, sort of away from the staples, the Clorox, the Procter & Gamble's, the traditional names that would do well in an economic slowdown or a recession, but that are trading at particularly high multiples right now. And, I think you want to play for an economic slowdown, not a full-blown recession. So I think those middle-of-the-road names, like a Walmart, like a Dollar General, even like a Dollar Tree, those are places to go right now.
All right, Jeff, we will leave it there. Thank you so much for all your thoughts today.
Shepard Smith here. Thanks for watching CNBC on YouTube.